Good morning traders, welcome to the morning update. My name is Mark Owen and today is Friday the 11th of November, and today we're going to have a look at what's happened throughout the week. It is a pretty quiet day today within the markets in terms of bank holidays around, very limited news, and to be fair I wouldn't be surprised if the moves of the week have already happened and we might see a correction, so to speak. Well, let's move forward and see what's taking place. So, news announcements. We've got a French bank holiday today. We've got Canadian bank holiday today, and US bank holiday. Later on this afternoon, we do have consumer sentiment coming out from the US, and we've got Governor Poloz speaking on behalf of the Bank of Canada. Now, they're not till late this afternoon, 3 p.m. UK time and 10 to 4, as you can see. Now, whether they still have the impact that we would usually see in a market on the fact that basically we've got the US and the Canadian bank holidays today, so liquidity will be a bit dry. There's not going to be the full enthusiasm in the market, so I could see that if there are any major shocks, then especially for the Bank of Canada, if he does announce anything untoward, we could probably see a significant move through lack of liquidity in the market this afternoon. So that could be quite interesting. Other than that, it's a pretty quiet day. Okay, so let's have a look what we've got here. We've got the Nikkei. With the Nikkei, we've got this rising wedge formation that you can see moving here. Now, we've coloured in the top of the trend line in red because marking as resistance, and the bottom part of the rising wedge in green marking as support. Places we're looking to buy from. Now, all the way up here, we were talking about potentially buying the Nikkei from these levels of support. First sort of barrier we were looking at was this 1700 barrier, 17150. It broke through there and there was a potential opportunity for retest, but it never came. It actually came back down to support before moving again. On the presidential day, what you'll see is we potentially thought we might have seen a close below, and it could have been a shift in sentiment. But how wrong were we? Because on the morning that I did the video, the close was somewhere around here, and I said if we do get a close below, then we'll be looking at a potential reversal pattern completing. However, what you can see is the market sentiment carried on to the upside, and then the following day until we touched the top of the rising wedge. Now, we've got 2 points of structure that I think is potentially likely to happen. So what we could see is we could see a pullback from the top of structure down to support before another push up, and we could meet this previous structure high, top of the rising wedge high. So you've got points of confluence before a pullback, before the start of the correction of the pattern maybe. So how we can look at trading this is 2 ways. We can look at shorter time frames, trading the correction down to the bottom. I do believe that 17140, 17150 is going to be a next sort of major support area. We can see that the sentiment is definitely to the upside, so whether this pattern is going to break or not, or complete I should say, is another matter. But if 17700, 17800 breaks this red zone here, then we've definitely got bullish momentum for the rest of the year to see the year out. It is coming up to Christmas, so we do have what we call the Santa Claus rally, so I wouldn't be surprised if we see something like that. Moving on to the S&P, well, the S&P started off the week quite interestingly because the FBI announced that there was going to be no charges into Clinton. There was no sort of, they couldn't see that any crime had been committed. And if we have a look at what happened, prior to the FBI announcing that there was going to be no charges pressed or no crime committed, the markets were giving a sell-off. So what that sort of hinted was that the markets were potentially anticipating that if something was going to happen to Clinton and Trump was going to get in, we were going to see a decline or a sell-off in the markets. And to be fair, this is what I was actually anticipating. If Trump did get in, a sell-off in the markets and a rally in gold, that's what I would have expected. However, what we've seen and what I anticipated were 2 completely different things. So the initial reaction when Trump got in and was elected was a huge sell-off. Huge sell-off. I mean, 3-4%. Some markets dropped 5%. But then the buyers got in whether they use the Trump as it's not conspiracy theory, but whether they use Trump as a way to drop the market significantly so they could buy in at better prices in the lead up to Christmas, who knows? But look, that's exactly what's happened. The market dropped significantly. It came down to sort of major area. If you look at this, there was no way of trading it according to the daily, but if you do drop down the time frames, there was some real nice change of cyclicity, which, to be fair, it would have taken a brave man to trade. The dollar index, I mean, this was pretty perfect when we look at it. Came up to resistance, came down to support, bounced at support. We had a push on. We thought Clinton was getting in. Markets were respecting that. Trump announcement came in. The market dropped significantly, but look, it came straight into our buy zone. Straight into it, the 50% retracement. Top of the trend line, retested this. If we look, yeah, it's pushed through, but if you drop down to smaller time frames, there's some real nice movement and change in cyclicity that it gave us a perfect trade if we'd have taken it. Like I said, throughout the week, I've not been trading this week, so it's not something that I would have taken on. Although hindsight, it would have been the best trade of the year. So we can all be great hindsight traders, and unfortunately, we weren't this time. It's one of those where we look back and we go, do you know what, the technicals there actually played out beautifully, but to have actually traded it, I think would have taken some serious courage and maybe a little bit of gambling. So that's why we did the right thing. We sat out of the market. If we look at the euro exactly inverse of the dollar index, came right up into our structure point. Down on a 5-minute chart, the technical setup was absolutely beautiful. But like I said, it would have been a bit of guesswork. Yes, there were technicals there, but who's to say that just a little correction on the 5-minute chart and it couldn't have carried on flying up to the upside? You know, these are things you've got to make a judgment call, and you've got to work out what would it mean to you if you lose a trade? What does it mean to you if you actually do something that you wouldn't normally do? So for me, it was stay out, watch, look back. I look back, I review what happened, and yeah, it could have been a fantastic trade of the year, better than our gold trade at the beginning of the year, but anyway, it isn't, so I haven't lost anything. That's the main thing. Okay, so dollar yen, again, look what's happened. We saw very similar picture, except this one's actually gone on to create a new high, whereas the euro's sort of sat at a double bottom, the dollar index is sat at double top. This has come on to create a new high, but it's come straight into structure. And we're showing that because on, I think it was either Wednesday or Monday, I was talking about where would I like to see the market stop and where's going to be the next sticking point. And I highlighted 106.64 earlier on in the week. And what I've done is I've just put in the 1 hour chart just up here so we can see what's actually happening. We can see the market's rallied up, it's pulled back down, it's rallied up again, pulled back down, and it's rallying up and potentially pulling back down. So on a smaller time frame, what you've got here is you've got a proper head and shoulders forming. Black line here is showing the neckline, and if we are right, we'll see a break and close below this neckline. Simple target is going to be around the 105 number. So there's some decent reward in there. If we are going to see a dollar correction after this one directional move from here all the way up here, then I think you've got a nice little potential counter trend trade on Friday afternoon there. Today, looking at cable, well, you know, it was down in this consolidation area here. We were all talking the doldrums for cable. The one thing that we did know from our commitment to traders analysis were that the commercials were buying heavily. I've got to be honest, I didn't have the commitment or the willpower to go through with any sort of trade here, but what we could see is this. In fact, let me just see if I can bring up a highlight. Oh, sorry guys. So what we did have here was this sort of trend line through here that we can highlight there. Once we got a close above there, this was a signal that we got a bit of a shift in sentiment, and the market now is correcting and it's pushing back up. So opportunity wise, If you are intraday traders, then I think you've got bullish momentum sterling, look to be a buyer of sterling up into the 128, which will coincide with a correction on the dollar index if we are going to see that. So I think 128 is you're going to be your next sort of point on the dollar with cable. At this point here, this is definitely a key area to be watching for some sell signals, or if we're going to break above, then it's a great area to be looking for some buy signals. Okay, so this way we can watch support become resistance, and we'll look to potentially sell from this zone here. So next market and last one of the day is going to be coffee. So this is our entry order sat in here just at 179. Now it is a sell limit. It was one I was looking at trading with the interaction of the long-term trend line coming back to early 2011. This would have been the third touch. As you can see on my data, it's not quite got there. On other people's data, it has touched their trend line, so they are in this particular market. Now, just because it's in the market or I've missed this initial trade, doesn't mean that I'm actually going to stay out of this market. I'm leaving my order there just in case there is a return, but what you can see is this green box here. Now, green box, wherever I put green, it means support, so potentially looking for buys. Now, this signal that we're looking at here is for a commitment of traders trade. So if we are right, and this is going to be the start of a potential new market trend, i.e. a move back down here somewhere, then what we should see is a break of this level here, and I'll look for this support to become resistance, which is about 161. So we're going to look for a breakthrough and a pullback, return and continuation short. Alternatively, if we see a rejection of this level, we might see a push higher and we could get the double top we're looking for and a sell signal from here. So options are open on coffee, and we'll look to see what happens. Okay. Now we do have an event coming up, which is London, 15th of November. So anyone that hasn't actually met Phoenix Blue or would actually like to come and do some live trading with us, then please register on our website. I'll drop an email to mark@phoenixblue.co.uk, info@phoenixblue.co.uk here. Either one of those, drop us an email, say you'd like to attend the event, and we'll send you out a link where you can register. If you are based in Norway, particularly Oslo, on the 21st of November in the evening, we've got a 3-hour live trading event there. So anyone in Norway looking to learn how to trade, looking to make a secondary income from trading, then you really need to come and register, come and meet us and meet some of our Norwegian traders who are doing exceptionally well. Okay, it's going to be a free event. Come down after work, very, very friendly, open atmosphere, ask any questions you want, and we'll look to work with you. Okay guys, well listen, have a great Friday, enjoy your weekend, and we'll see you bright and early on Monday morning. Okay, bye bye.